ticker symbol TYDE may have found its floor already, but let's go ahead and validate in this video. What is up, you guys? Thank you so much for stopping by once again on this Sunday fun day. This is ARCa coming at you with a TYDE technicals and raw price action thread of analysis. Before we get started, please make sure to subscribe to the channel, like the video, and share the video with a friend so that you and them could consider joining our trading community in Discord called ARCa Bulls. With that said, let's dive right into the charts. Okay, so I got to present to you a few ideas here. So first of all, I was looking at TYDE here on the 8-hour chart, and I felt pretty strong about this descending triangle, this right angle triangle, which by the way has a price objective, right? We can actually take a trend line from the hypotenuse of the triangle to the lowest point of the triangle, and we can apply it to a supposed area of breakout. Pardon me. So usually these triangles tend to break out at about 70 to 75% to the apex of the triangle, but in this case, you can actually see that we're well within the 85 to 90% completion of this formation. So this actually was a little confusing to me. So I'm not gonna lie. This is a very complex chart, okay, and it has so many psychological components, and a lot of you who watch my content often will know that I often leave my gaps for future play, right? But I mean, in this case, this is just ridiculous. So we have a tiny little gap here, right? So we have another one here. We have another one right over here. We have another one right over here. We have another one here. Remember that I'm taking into account regardless if the gap is closed or not. All right, so we have another gap over here, another one. I mean, just massive amounts of gaps. So I actually started drawing them, right? And then I realized, I just looked down and I'm like, wow, I'm not going to be able to catch up with this. So let me actually look at this in a different perspective. So I want to just take you on the journey that I kind of made, you know, to understand what could be happening for TYDE, which was very challenging, but I think I may have got it. But let's move on to the next chart now. So on this chart, I want to go ahead and show you two different traders here. Okay, so I was actually supposed to leave this a little dim so that I can bring it up to you later. But first of all, let's go ahead and talk about the broadening descending wedge, okay, and we'll take the SMAs out. So the broadening descending wedge is actually playing by the playbook rules pretty nicely. So we have the playbook rules, meaning that we're gonna use 3 tests of the resistance followed by a capitulation and then a liftoff, right, to try and break out on that true test number 4. So in this case, we actually have, succeeded all of that stuff as well. And we even created a bull trap over here and then came right back down. It actually came very close to touching the trend line. It actually didn't. So now we've been in this, week-long consolidation period here with almost the same range. So now this, the range is actually very curious to me, particular to a few candles. This huge long-wicked hammer or hammer candle, inverted hammer, and also this huge long-wicked, not quite a hammer, right? It's just, it looks like it, but it's not. So these two candles actually brought a lot of light into what we could be looking at here. So this becomes a very complex breakout. So now this is actually a buy formation that we're looking at here, and this creates a second trader. So there's people trading the broadening descending wedge, and there's also people trading what could be a very large channel. So this channel looks like it's not respecting any of the traditional rules. First of all, unless we are trading this within a larger time frame, I'm talking about like a 5-day or a 3-day, the channel, right? And we're only on test number 1, right? So the likelihood of that is not so great. Okay, so what I'm basically looking at here is that we're in preparation to breaking out of the broadening descending wedge. It's still going to take some time, but we're in that prep and we're loading now. So the obvious resistance would be at that 42.69 cent zone after breaking out of this. because of the test that we have right here of this channel, which lines up perfectly with this top here. And so in this case, we would actually face that resistance from that 46.62, and then we'd actually have to come back. I'm sorry, what did I say? It was 40, actually 43.35 if we were to, it's gonna depend on which day we actually get up there, right? So let's just say 40 cents. So we would actually have to lift off the 40 cents and find resistance here, and then we would come back and validate our newly converted resistance of the falling the broadening descending wedge. Wow. We would find that resistance at the top of the channel, then we come back and validate this new support before continuing on to the upside. So just remember that per the playbook rules, I'm not saying that we're going here again, I'm just saying that per the playbook rules, the take profit for this particular formation is actually located at $1.45, almost $1.46. So just so we're kind of clear about that, right? So this is very typical of this formation, right? So similar to like CEOS, we had a broadening descending wedge, and then it eventually came up to the top, right, to the genesis of the formation, where you usually take that profit. So, and also GTII. So GTII was just a recent success of that. We came right to that touch at $2.94, or I think it went up to $2.98, which is the genesis of the formation of the broadening descending wedge. So this is a formation that is traded often in a bear cycle. So this is why I'm saying that we could be in preparation for that. So let's go ahead and validate first what could be the first steps before we can make that upside move, right? So to find out, we're actually going to use the RSI. So first of all, I'm going to open up a single pane so that we can see the daily RSI. So this is divergence. Okay, so the divergence is the opposition of price action versus momentum. In this case, momentum represented by RSI, relative strength index. So I've actually noticed that we're creating about 1, 2, 3, 4 drives of regular bullish divergence, which actually happens when momentum is creating a higher low and price action is creating a lower high. I'm sorry. Lower. Geez, this is always, I hate saying this all the time. So I left this here so that you can be able to distinguish which drive of divergence we're actually facing, right? So I know that price action is actually suggesting a continuation to the downside, but that's okay. It's just we need to load whatever we need to load, right? So let's go ahead and now open up a multi-pane so that we can see what we can face for the coming sessions. So we're going to start off with the immediate short-term time frame, this time on the hourly. So the hourly is suggesting consolidation even still, just like the way we've been facing for the last few days. 4-hour is still suggesting consolidation as well. The 8-hour is suggesting some downside, and it looks like it has made already a bearish cross. So I'm talking about below the 14-day simple moving average represented by this pink line. The RSI signal is the purple line. So we've already made a very, very slight cross beneath that 14-day simple. I'm just a little worried here because it looks like we had finally broken out of that, and we've been below that 14-day simple since January 11th. So now that we're seeing that final breakout and then we're coming back down to test it, we may be able to succeed it, but I just have to point that out. It's a little bearish to see that. Okay, so now the daily time frame is also suggesting a little bit of a downside as well, but please mind that we're well within the gravitational zone of the bear strength percentile, which usually can gravitate us back towards the upside. So, in the upside, we actually do have the opposing side gravitational zone and the 14-day simple as a form of resistance, so we actually have to be very careful about that. The buy daily is actually suggesting slight consolidation here. Okay, so this is not. It looks like we've actually been at it for quite some time too, and also the 3-day is still suggesting some consolidation as well, slightly bullish. So there could be something of a fundamental metric or some type of news catalyst that we could be waiting for for this thing to officially launch. But it's in a prime position for. It's literally at a great stance. Is what I'm trying to say. It's like it's ready to pounce. It's kind of like what it's looking like. Right. So if we were to see the potential downside continuation there, the most obvious target would actually be the wick low of this candle iteration on January 30th. Right. So it would literally be at about 1914. So that's and then still suggesting a continuation of this consolidation period. So I want to just let whoever is holding TYDE know that this is a pretty bullish stance. The worst case scenario is that we actually come back down to about 1731, which can cause a flash wick down to the actual wedge bottom, right? So the descending broadening wedge we could actually see a touch of anywhere between, I'd say 13 to 14 cents. 1350 would be this iteration if just say that this happened to fall on February 10th. It's just speculation though. So just know that those are potentials. Even I mean, I'm sure that even if we take a range fib here from the current price action, I'm talking about wick low to wick high of the daily range, we could possibly see some type of confluence into those targets. I may actually have to do it. Oh no, actually that's fine. So the touch of this candle here that we were just talking about at 17 cents just so happens to land right at the 2-spot 618. And the 618s are very important. And here is a clear, I just want to say that it's kind of a validation that we could touch that. I just said the low of this candle here would be at about 1914. Look at this, the 1-spot 618 at 1911. This is a golden mean and it's very important. Okay, so this is a very probable target here. I mean, more than likely that we can touch that 1911 for a loading zone. I just want to have everybody kind of be careful that this 1911 could actually present the potential of a continuation to the downside. I'm talking about wick down to here to 1736. And another very, very curious thing is that 1550 or 1560 just happens to land on February 8th, Wednesday, right at the bottom of the channel. Okay, so I know that this one's a little more. This is less likely for us to hit, but I'm just saying that the probabilities are there in case we do face that. And then what I was talking about it isn't quite the 10th, right? About 13 cents, about between 13 and 14 cents is what I said down here. The 4-spot 618 is located at 1385. So this is moving in a geometrical format, and it still has it still has a lot of room for it to be considered and followed, right? So even the closure of this candle falls in the geometric levels, right? So everything is rhyming pretty nicely here. So I'm just trying to say that this thing is ready for a bounce to the upside. Could be just maybe a catalyst that it needs, or some good news or something, right? But it's ready. So if you're long this, just know that there could be some slight downside, and before this could be just another accumulation phase before a continuation to that upside. Know that I'm not a financial advisor. Take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy or sell any assets whatsoever. Okay, I need you to do your own due diligence, and everything will be just fine. But with that said, you guys, I wish you well and a great rest of your weekend, and I will catch you at the bell mañana. Adios.